All right, guys, welcome back. Today, I just want to go through this quick GER30 position that I took earlier on this week. This resulted in a 2R gain. It's a 1 to 2 position, very, very nice. Price did actually end up extending much, much higher. And if I play price forward, it actually ran to like a 1 to 10, which is actually pretty common for a lot of the positions I take. They end up running a lot further in profit, but I end up taking profit specifically early to guarantee that I get out the market before price starts to retrace or starts to deplete, because it's just psychology principles. Get out early rather than trying to catch the entire movement and being greedy and trying to hit a home run. Anyways, I just want to go through this trade because this is a prime example of a break and retest, prime example of everything I've been teaching you guys. And it's one thing to sit there on a whiteboard and see it, but it's another thing to actually execute it in a live market and to find it in a live market, because oftentimes price looks a little bit more messy than it does in the examples that I've been showing you guys. So I want to go ahead and actually go through this step by step and actually explain why I took the position and why I got out at the level I got out at. So starting off on a daily time frame, we're always looking for two major confluences: market structure, so referring to the past 14 days of price action, where is the overall trend headed. So clearly right here we can see the past 14 days, past 2 weeks of price, very, very bullish. Like, there's no doubt about it. We're making higher highs, higher lows continuously, and we've just recently broken a clearly key level. So we're very clearly in a bullish uptrending market. So the next step is now market sentiment. What's the current behavior of price? Because we can be in an uptrend, but you can be in a process of retracing while you're in an uptrend. So you need to identify where you're at in the trend. And in this sort of scenario, you can see that the past 3 days of price action, or the current behavior of GER30, was also incredibly bullish. The past 2 days were strong bullish candles. Even the past day before the candle that I had printed was a strong wick rejection to the downside and a body closure above where we started. So it's like a little rejection candle. Again, it's just a confirmation of the behavior that price is looking to extend and continue higher up. Let me just mute my phone real quick. Cool. So from these two steps alone, I can pretty confidently say that 9 times out of 10, GER30 on a lower time frame is going to be headed higher. So it's just about identifying a key level and a point I can enter off of safely without getting stopped out immediately. Now, scaling into an hourly time frame, it was all about identifying a key level or a sort of a midpoint for price to bounce off of and enter. Because a lot of the times when you come onto price, especially around New York session, and bear in mind this trade was taken a little bit later on in New York around 3 p.m. But usually when you come on around New York, price won't always be tapping into a key level or creating a key level. Oftentimes it'll be a little bit away from it and you have to wait for price to come in, bounce, and create something before it actually makes a movement. But what I initially noticed, if I actually go ahead and remove all of my drawings right here, is just simply based off of the pattern. And this is where the market maturity comes into play, and the element of just being in the markets for a long period of time, is my brain recognized this little formation here of a large bullish impulsive movement and this counter trend corrective. So if you guys have been paying attention, you'll know that this is the 3-pin breakout. It's a very, very common formation that forms on a lot of the indices, and it's just essentially a break and retest with more steps. It's a large impulsive move to the upside that leaves a fair value gap, then a counter trend corrective. That counter trend corrective leaves within itself, leaves a key level, because as we learn, key levels are formed when market structure is created. So the structural high and the structural low, or the swing high and the swing low, are always going to be key levels. So we can see the top of this impulsive movement and this little wick rejection right here sort of created a nice little key level across, and equally below it, where this candle rejected and where these bodies are at and where this is sort of rejecting towards, is a little center key level as well. But again, the point is, it's a counter trend corrective creating this 3-pin breakout that I've spoken about tons of times, so hopefully you guys are familiar by now. Drew a little key level across. Bear in mind, I wasn't 100% certain this was the key level, but naturally with price, you just draw a box, you wait for it to react, and if price is reacting to the level is there. But as you can see in this scenario, we have multiple body rejections, we have a accumulation, and this is when GER30 was stalling and failing to break higher, which again is a very, very common tendency of the 3-pin breakout, especially when it's about to have the extension or the impulsive movement. It loves to just formulate these little orders, wick in either direction, and make out like it's not going to go anywhere before it extends. This trend line is not really a trend line, it's just for visualization purposes, so I can see when price is broken above, and then on the break above, because it is GER30 and it tends to retrace and come back a little bit more than US 30 and other indices, I went ahead and waited on the 15-minute, and as you can see on the 15-minute, we created a key level, we broke above, and we came back and retested. Now, if I was trading the 15-minute time frame, I could have very easily drew a key level right here, because as you can see, we're respecting this zone, So this was the break, this was the retest. So this right here could have been the continuation movement if I was trading the 15. And in some essence, I essentially did do that. But instead of immediately entering on this candle, which you typically would have done on US30 or NASDAQ, because I know German 30 and I know its tendencies, I decided to wait for the 30-minute candle to close, which is not something I typically do. But in the instance of German 30, I just know its price action and I know it likes to just fuck about a little bit more than other indices. So I waited for this double wick projection on the key level. That's the break, that's the retest. These three candles right here is the depletion movement. This is price losing its bearish volume. And this right here, this candle, this 30-minute candle closure, if I zoom in on a 5-minute, is a beautiful break and retest within itself. Very nice candlestick closure, and it gave me an absolutely perfect entry. So honestly, this is honestly a prime example of a break and retest playing out on multiple time frames simultaneously, and it all just lined up around the same sort of level. Those multiple entries that could have been taken here, this candle would have been a valid entry, this candle is a valid entry, and this candle is also a valid entry, but it's just German 30, so it depends on the tendency of how you want to approach it. Now, stop loss placement could have very easily been below the structural lows, but again, because I'm familiar with German 30 and I have PTSD from getting wicked out on German 30 positions, I was like, yo, this is going on 4 of my funded accounts. I'm not about to get wicked out. So for psychology reasons, I gave myself a very wide SL and put it the whole way down here to give price some breathing room. So if it did want to come down further and take out these structural lows like a little liquidity grab, then I could have still been safe and I could have remained in the position. As you can see, price literally went into no drawdown at all. It was essentially a sniper entry, and we just had a nice little uptrend to the upside. Now, my TP was set at a 1 to 2 because it's a fixed RR. I always target a 1 to 2, especially when I'm trading a live funded capital. There's absolutely no need to get greedy, especially on the indices when they trend continuously. It's almost impossible for you to understand when to get out the trade. So you're either going to end up holding onto it forever, riding it the whole way up and then back down, or you're going to end up getting out too early or get out too late, or just it's a whole psychology mess. So you're always better off just having a fixed RR, fixed target. In this scenario as well, the 1 to 2 was just above the previous swing high as well. So the idea is, at the bare minimum, even if we're not going to continue higher for the day, we should at least take out the previous swing high wick, which would have been around the 1 to 2 right here. But as you can see, price ended up playing out further. But once again, I was happy with my profits. I got out. I do have some live trading footage, so I may overlay that now, if my editor can be bothered to do that. But all in all, this was the position. And as you can see, at around about the time that I got out of the trade, price started to lose a good amount of volume. So German 30 typically takes longer to move than the other indices. It's a lot slower. So for this trade to actually hit a 1 to 2 within 2 hours is actually exceptionally quick for German 30, because usually it takes a lot longer. But you can see around the time that I got out, price started to consolidate and started to move sideways. And I would have essentially had to hold the trade for another 2 solid hours to do absolutely nothing. So in terms of psychology reasons as well, the longer you hold the trade, the higher the probability is that you fuck up and do some shit you're not meant to do. So the easier you can get in and get out of a trade with profit, the better it is for you, your psychology, and your account balance, because you've gotten in, you've gotten out, and you made money. The longer you stay in the markets and sit there and deep it and watch price and check it and trading via alerts, and like, at some point you're gonna do some shit and something's gonna go wrong. But yeah, that's pretty much it. That's a tactical German 30 trade breakdown on the back end of a 3 pin breakout. Very, very easy break and retest. I'm gonna see you guys for some more examples in the future.